Hey, hello everybody. This is Brad Lewis with Premier Marketing, and we are excited to have you on today's webinar. We appreciate you taking time out of your busy day to join us. We are going to be talking about the Retirement Plus Multiplier Annuity today, and obviously with the changes in the market and everything that's happened over the last month or so, a couple months I should say, annuities is certainly taking a center stage again for a lot of clients out there that are looking for safety and security for their funds and that are moving into the retirement years. And this couldn't be a better time to talk about a product like this. I'm happy to have, I don't want to say old friend because she's not old, but a friend for many years on the call with us today that has a really long history with Premier, and we just love her to death. And she's always been a great advocate for our agents and for Premier. So we're blessed to have her on the call with us today. And that would be Leah Glowacki Bishop. Leah is the wealth management consultant with Sabras Partners that helps us represent this product. And we're just excited to have you on the call today, Leah. And we can't wait to hear more about the Retirement Plus Multiplier Annuity and where agents can find a fit for this product with their clients, because I think this is a great time to be talking about that. I'll let you take it away.
Thank you, Brad. Thank you so much. And yes, Premier is near and dear to my heart, as are you, and all the relationships we've had for many years now. So I would like to welcome you to the Retirement Plus Annuity presentation. You know, you might already have a Sentinel or an ACAP contract, but this needs actual special contracting because this is a proprietary product that was developed especially for a fixed annuity marketplace for the seniors, and you'll see why it is such an exciting product. So even if you have an ACL, Atlantic Coast Life, or Sentinel contract, you will need additional contracting to sell this product because it is a proprietary. And it was developed by Sabras and ACAP together. And it's limited distribution, so we're lucky to be working with Premier on this product. But before we start, I want you to think about the current annuity business that you're doing now. What are you selling most of? What carrier? What product? What riders? Are your clients mostly looking for accumulation or income? If you're like most in the business right now, you're probably presenting the majority of your clients with an FIA, a fixed index annuity for accumulation, and probably a 10-year term. But why is that? Why a 10-year term? It seems like the industry has really defaulted to the 10-year term. But with the market volatility right now, interest rates are rising, and the client, like the rest of us, really just doesn't know what's going to happen. Where should they be putting their money right now? What do they expect in the long term or the short term, the near term? You know, a lot of times people aren't buying the product maybe you're presenting them because they have a hard time locking in. I'm sure a lot of you are hearing that. What's going to happen? Locking in my money for 10 years right now? So when you present the 10-year product to them and you say, you know, I've come up, I think this is a great solution for you, it's then sometimes hard to back down. So today I'm going to demonstrate for you how the RPM, the Retirement Plus Multiplier Annuity, can be positioned with your clients to help you close more sales while still getting well compensated for your efforts. So let's start. Let me get to this next slide here. Sorry. Why won't it go? There. So what this is I'm going to talk about the 5-year duration, but we actually have this product in the 7 and the 10-year, but you'll see why the 5-year, and it's a very strong product in the 5-year. The issue ages are 0 to 85. And again, it's Sentinel and Atlantic Coast Life are the two carriers, and it depends on the state that you're in, whether it's Sentinel and Atlantic Coast Life. And the compensation is very high. For Sentinel, the street compensation is 6%. And for Atlantic Coast Life, I know, same product, and I'm talking about the 5-year now, it's The difference is that Sentinel has an annual trip contest, and Atlantic Coast did away with theirs, so they put the money into the compensation. Our caps and par rates are some of the highest in the industry. They're very competitive. We have up to a 200% participation rate on our index, our exclusive unique index, and we also have a 6% cap on the S&P on the 1 year point to point. We also have a lot of flexible riders. And what I mean by that is there's 3 ways to buy this product. You can either buy it standalone, no riders, no fees, no anything, or you can put on the income rider, and that gives you a guaranteed lifetime withdrawal benefit. Or you could put on the growth rider, and what the growth rider does is bump up the par rates and the cap rates so that your clients can get even more returns and better returns. We also have a couple of unique things, such as on the 3-year index. For a lot of 3-year indexes, if your clients pass away partway through that index, or even on a 2-year, what happens is that they get the death benefit back to the beginning of the index. On the Goldman Sachs index, we will calculate it on the date of death so that your client hasn't risked missing out on any of that growth during that period of time before they're passing. We also have nursing home and terminal illness benefits, and we also are RMD friendly, and we take inherited IRAs. Huge marketplace for inherited IRAs, and especially now with the Secure Act, the changes in 2020. If you want to know more about that, let me know, and we can help you with all of your inherited IRAs. So that is about it for the product and how it works. So let's talk about positioning of it and where it really fits in. So, when you think about what is happening, what are retirees facing today? Well, they're facing, market risk, a lot of volatility out there. Also, global health concerns. We have gone through now over 2 years of up and downs, and now we have monkeypox. Who knows what's going to happen? Who knows what's coming next? But one of their biggest concerns that seniors have is their longevity risk and outliving their money. That is one of the things that is like the number one is, what will I have enough money in life? I can't run out of money. Number one concern of seniors. Also now, we're seeing the rising healthcare costs. Medicare Part B went up this year significantly. Social Security, pension risk. We're seeing all this inflation. Are we going to be able to catch up goods and services? And lifestyle. Most people, when they retire, they want to keep maintained, or some of them even want to upgrade their retirement lifestyle. Well, how are they supposed to do this when everything is so unknown? And I don't have to tell you about the size of the fixed index or the annuity marketplace, but we see all the statistics here, and we know that it just is continuing to grow. So why am I talking about seniors? Well, because seniors are who's buying these annuities, right? So let us just step back and talk about the baby boomers. The baby boomers were arranged now in age. They were born in 1946, the start of them, all the way up to 1964. And every stage of their life that they went through the life stages, things were invented for them, such as Pampers, bicycles, like the, fancy, everyone might, remember seeing some of these Schwinn bicycles out there, Ford Mustangs, gym memberships, Botox, all these things that the boomers. So why am I talking about this? Because what if you knew now where the boomers were going to spend their money next? The baby boomers are now ages 58 through 76. And where are they spending their money? They're spending their money on healthcare. That is the next segment and will continue to be the segment. There's not many guarantees in life, but there is a guarantee, and it's a certainty, that baby boomers are going to continue to age. And as they age, they're going to need healthcare. And so, not only healthcare, but it's also like not only the drugs and the prescriptions and medications and physicians, but it's also, you know, assisted living care facilities, nursing home, home health care. So, you know, as we see, you know, the statistics, 10,000 Americans turn 65 every day. 20% of the US population will be 65 or older by the year 2030. 75% of the healthcare spending, you know, goes towards chronic care. So all these things are happening, right? So this is where they're spending their money, and this is where they're going to continue spending their money. On prescriptions, healthcare premiums, places, as we talk about, products and procedures. What really I find disheartening is that 80% of Americans over the age of 65 have at least one chronic disease. I mean, look what we have to look forward to as we age. So, you know, this is not going away. This is only really going to continue. So why all this talk about healthcare and the elderly and the seniors and where they're spending their money? Because what this product has is a unique and proprietary index. This product was developed by Sabris and with ACAP. They put it on the ACAP paper, you know, the Sentinel and the ACL, and they have a unique Goldman Sachs Aging of America Dynamic Balance Index. And what this invests in is healthcare and healthcare real estate. The link here shows, you can go to and you can get this link, and it talks all about the index. If we had more time, I'd go into it and show you what current holdings are, which I do have in a slide coming up. But you know, currently, day by day, it will show you what the returns are for the year, how everything is doing. So it was a unique index built for this product, and that's why it's a great story. It's talking to seniors about, where do I invest my money right now? What is going on in the market? We don't know, but we do know that seniors are going to continue to age. And as seniors and boomers continue to age, they're going to need health care. So will this index go up and down? Of course. But will it also be, you know, something that is going to continue? You know, unlike other, you know, product stocks, everything we see that had a boom during pandemic, now we're having a bust, you know, Netflix, Amazon, all sorts of things are up and down and very volatile, where this one we know will continue. So what is in the index? It's made up of equities, and in the equity side, it's the Selective Aging of America Index and or a fixed income, and they use the 10-year US Treasury Rolling Futures Index. But one thing they also have is they also have a cash, a money market account. And you're saying, well, money markets aren't earning too much right now. Why is it important to have a money market account? I know there's other indexes out there, and I've been on Barclays call, I've been on other calls, and they don't have the option to go to cash. So what is happening right now in the marketplace? As interest rates go up, what happens to bond prices, right? Bond prices go down. So a lot of these indexes that are in equities or in bonds, and they don't have a cash option, they're sort of stuck. They can't put more into equities, especially if they have a volatility index. And this product does have the volatility index, a 5% volatility control. And to do that, they have to buy options, and it becomes very costly. So a lot of these other indexes may be stuck in their bond portfolios. And the Goldman Sachs Aging of America Dynamic Balance Index doesn't have to. They can go to cash. And so I actually had one of the representatives of Goldman Sachs on a call yesterday, and she was saying, you know, well, why would we want to be in cash right now? Because it's better to be in cash and maybe not earning much than to be in the bond market where prices are continually dropping right now as interest rates go up. So this is something that's going to, you'll see, keep the returns very strong, keep the returns, you know, less volatile for your clients. So Here's an example of that, and I know this is a bit of an older example now, going back to and just really how the volatility control index works. If you look at the graph here, you'll see this was the beginning of the pandemic back in 2020, that the S&P lost 30% in 30 days. And I don't know if you can see this light line up there, but that's what happened to this index. It stayed positive, it stayed very strong. It didn't lose like the S&P did. And now we know the S&P came back, and now again it's down. I looked this morning, 16.4%, I think, for this year. So a lot of volatility, a lot of things that your clients don't necessarily want in retirement. And you know what? With this product, they don't have to lock in all that long. It's 5 years. It's not 10 years. And after 5 years, if it's going well for them, they can keep it. After 5 years, they can have full access to their full accumulation value. So what are the constituents in the index? Well, here's some of the top holdings, products that your clients know, company names that your clients know, products that we all use, and even things like Moderna. A few years ago, we may not have known about that name, but now we do. Again, this is all, you can find it daily, and the top holdings don't always change, but you can find all of this on that link to the Goldman Sachs index. So how has the performance done? So let's take a look. This is the 1-year performance, and you'll see that it was 3.82 in 2021. In 2020, it was close to 5%, and in 2019, it had 11% return. So clients that had this growth rider, and if they put the growth rider on now, that bumps up their caps and pars that we'll see, they would have gotten a 4.8% return in 2021, a 6.25% return in 2020, and a 13.75% return in 2019. So let's look at the 2-year. So last year in 2021, the 2-year performance was for the 2-year period was 8.82%. If the client had the growth rider on there, it would have been 14% at the end of 2 years. And the 3-year performance has been 20.53% at the end of 2021. If a client had had the growth rider on, they would have had 41% return at the end of the 3rd year. So pretty powerful returns. And again, the volatility index is keeping it pretty strong through all of this volatile time right now. So the RPM is also very simple. When you finally get to the point of doing an application with your client, so you've talked to them about why they should be in an annuity, all the benefits of the annuity, why the FIA, then you talk about the product, and then you have to fill in that application, and then you talk about, well, where are we going to invest the money? Where are we going to allocate, the funds to? This one is easy. It has the Goldman Sachs, a great story that we talked about, investing in healthcare and healthcare real estate, and the S&P 500. So you don't have all these different indexes to talk about, and it has the fixed bucket. So I just want to go through this right now. If you see the no growth rider, no rider, growth rider, income, you'll see that no rider and the income rider are the same for the percentages, caps, and pars. So I'm just going to look at these 2 columns, the growth rider and the no rider for now. So the Goldman Sachs 1-year point to point, 75% participation rate with no rider, 125 with the growth rider. 2-year point to point is 100%, 160 with the growth rider. 3-year is 140, and again 200% with the growth rider. And now with the S&P, the 1-year is at 28% with the growth rider 40%. 1-year point to point cap is 4%. 1-year cap with the growth rider is 6%, and 2-year point to point is 36%, and the growth rider bumps that up to a 56%. So pretty strong. Now these are the same for all, whether you do the 5-year, 7-year, or 10-year. and the fees are the same for the 7, 5, and 10-year. So you'll see the growth rider is 125 basis points, and the income multiplier, and we're not even going to talk about that. It's a very strong rider, but we don't have time today to talk about the living benefit rider, the income rider, and that's 95 basis points. And the fixed bucket is at 2%. So it's a very simple story. It's a short-term duration. It's going to address a lot of your clients' needs and concerns, especially in this, interesting world that we're facing right now, in all fronts. So just to recap, volatility continues, and it always will be there. Some periods of time are more volatile than others. The retirement risks, are certain. The aging of America aligns with, all the premiums, places, everywhere that, seniors are going, or seniors are talking to their neighbors about. Everybody in that senior marketplace is having some kind of healthcare concerns or knows somebody who is. And, we have the 5-year product with flexible options for liquidity, strong rates, strong index, a lot of marketing support for you. And I'm now open to questions. So thank you. And I look forward to hearing any questions that you might have about the index product, inherited IRAs, how we can support you, and how we work with Premier.
Perfect, Leah. Thank you for going through that presentation. That was awesome. What a great time to be talking about annuities with your clients because of the volatility that's in the market today. I have a mentor that said a long time ago that to have success with index annuities, you need volatility and you need a change in the market. You need the market to go up and down, and that's certainly happening today. So there's a lot of clients out there that are looking for a safe alternative, and this certainly fits the bill for that. I did fail at the beginning of the presentation to mention that if you have any questions, to chat them into the chat box. So if you could do that right now, Leah would be happy to answer any questions. There is one question that came in as far as being allowed to have a conversation about current investments if you don't have a securities license. So talking about securities products if you're not licensed. I know from our perspective at Premier, obviously if you're not licensed to talk about a product or that's out there, such as a mutual fund or an investment that's outside of your license, that that certainly is something you should steer clear of. However, if you're talking specifically about what Leah covered today, carriers have, and I'm sure there's some in here too, specific pre-approved pieces that talk about the allocation method and how the allocation works. And so you're definitely able to talk about the allocations that are available in this product and how it works. And Leah, I'd let you add anything there that you would like to.
Well, absolutely. This is not a variable product. These are not invested in, mutual funds. These are not invested in individual stocks. So, as long as you have your annuity license, and that's what, this is, it depends on the state you're in, but your life and annuity license, you can talk about these products. They're not registered products. And so when you're talking about the constituents, the holdings in here, you absolutely can show them. You can actually even send them to this, I'm trying to get there, to the link that I had mentioned on the Goldman Sachs. I was just going to show you what that looks like. And it's here, this Goldman Sachs link. So if your clients want to know more, if you're not as comfortable talking about it, they can always go here. As I said, it's always updated. Here's the fact sheet. Here's everything that we have been talking about. So this is all public record too.
Yeah, that's perfect. I appreciate you sharing. You probably hear Leah talking a little bit different. This is one of the things I love about her. She really applies this to what you guys do every day from a sales perspective. So she's a lot different than a lot of the other carrier representatives that you may have heard from in the past. Nothing bad about them, but Leah sees it from a different perspective because she's always offering sales ideas. She's always making it relevant to your business. And it really helps tell the story of how you can move into a product. So I actually don't see any other questions. Leah, do you have anything else you'd like to add before I close?
Please, we'd love to run illustrations for you. We'd love to work with Brad's team. The next case you're working on, please try us out, run an illustration, have an illustration run for your client, and all I ask is that you present it to them and see what they think. I think that you're going to be pleasantly surprised that they're going to really relate to this and like the story.
Absolutely. And as you said in the beginning, a 5-year product with great benefits can sometimes set the client's mind at ease. So that's perfect. So on behalf of Premier and specifically Shad and Shay, the people that you work with every day, we would invite you to give us a call to learn more about this product and to get contracted if you're not already. You can give us a call at 800-365-8208. And again, just ask for Shad and Shay or myself, and we can get you set up and ready to go. Thanks everybody for being on today's call. And Leah, thank you for being a presenter. We appreciate you, and we'll talk to you soon.
Thank you, Brad. Everyone have a safe and happy holiday weekend. Thank you again.
Bye-bye.